So the low float gapper strategy has returned almost 100%. What's it been, a month? Just over a month? Uh, let me pull up the let me pull up the paper trading account and I'll show you exactly where we're at as far as gains here. So you can see here we've realized 9,300 bucks on a $10,000 account. And I've got it recorded here. We started April 30th, so we're talking 5 weeks and we've nearly doubled. We'll see what happens here because, of course, the market has had a downturn. So we had a big red day on Friday. Same with QQQ, big red day on Friday. So we'll just have to see how it goes because this is definitely signaling a regime change. However, if we make it back to support, fairly quickly and we rebound, then all might be well. That having been said, this is low float gapper land. So it doesn't always follow the broader market. Sometimes when the broader market takes a break, a lot of people who were trading the broader market come to low floaters and low floaters come alive even more. But we'll see. We'll see what ends up happening. Right now, this is the reality. We have a $1,600 unrealized loss. That having been said, if we go back to the spreadsheet, we have almost a 70% win rate, and we have a fairly solid 2-to-1 risk to reward. That's an outstanding strategy. The return on this has been absolutely outstanding, and of course you can see that from the paper traded P&L, which almost doubled the account. But what I'm getting at is the risk here is that the regime changes, that something changes and this strategy stops working as well as it has. And after following low float gappers for 3 years, my first 3 years of trading, I can tell you with 100% certainty that this phase of low float gappers will change. It definitely will change. How that affects the strategy, I'm not too sure. Let's find out. We really realistically don't even have 20 trade occurrences, so just a baby data set. Cute little baby data set that needs to go through, needs to go through some crap. It needs to see some stuff in the markets before this data set can really tell a story. But certainly very encouraging results. That having been said, paper trading is paper trading. It serves a purpose. I am funding a $10,000 real money account to trade this strategy specifically out of it. Because, I mean, paper trading, like I said, paper trading serves a specific purpose. Once that purpose is served, you do want to move on to real money. Because of the risks of the regime change, I may not trade that real money account like right away, but I am funding it. So here's what I need from you. Leave a comment. What is your favorite type of verification software? Because obviously, if I'm going to trade real money, we're going to want some sort of verification so that you guys know that I'm trading real money and not just a different paper trading account, right? So let me know what your favorite trading verification software is. My favorite one that I'm kind of looking at right now is called Kinfo. Uh, I probably wouldn't sign up for the full account like I do most of my analysis on the spreadsheets, but for verification, it might be the right thing. You guys let me know what you think. What do you want to see here? So let's move on to the mid and small cap momentum one, which is a completely different story. 100% different. We are down $4,200 on a $100,000 account. We're down 5%, and we still have more unrealized losses. Like when I was logging this earlier, so space, I don't know what to do with this. So, so to put this in more context, let me show you kind of what I'm looking for more. So do you remember when IonQ went from like $10 all the way to like $80, that's what I'm looking for. I'm looking for something that's going to do this right here. I'm not looking for what space did, where it just went up and then came all the way back down. Now, if this holds support, why I'm still in this trade, and I've moved my stop up to break even, you'll notice. Why I'm still in this trade is because we could find support here and we could rip higher. They did do an offering. That doesn't always have to be a bad thing. If it's a real company and has real fundamentals, that has a real plan for the money that's really going to boost revenue, then an offering doesn't necessarily have to be a bad thing. But we'll find out what the market thinks if I get stopped out or not. Uh, so what we can see from looking back here on some of the trades that I placed is that I consistently seem to be buying at what looks like the top. But the thing is, when you get into it, you don't know if that's the top. You don't know if it's the top or if this thing's going to go to like $200. I have no idea what's going to happen. And that's part of why we're doing what we're doing. So here's another one that gapped up. Should I have taken profits? Well, I'm not looking for a 50% gain on my money. I'm looking for like a 4 or 500% gain on my money. And I'm willing to go through the work to find out what kind of criteria, what kind of market regime. Is it forward guidance? Is it earnings growth? Is it a specific type of chart that, looks for consolidation, some sort of specific type of breakout? Cup and handle. Is it a cup and handle? I don't know yet. But you can clearly see that this is not going well. We seem to be buying the top. The market's toppy. It seems to be going down, and a lot of these got pulled down with the market. So that's also something I'm going to make note of for this strategy. See, here's the thing, the low flow gapper strategy, it's all great. It's very exciting. We initially had success, and that success seems to be carrying through, and it's going very well right off the bat. But you're not here to watch me develop a strategy that instantly goes well. Because when you try to do that, it's not going to happen the same, right? I keep saying I've done a bunch of spreadsheets on these low float gappers. I traded them for 3 years looking at different kinds of setups and strategies, day trading, swing trading, all sorts of different stuff until I moved on to something that I considered more stable and I liked better. So I have a lot of experience, a lot of discretionary ability with that, and you're not going to be able to replicate that when you try to do this. That's why I'm going to stick with the mid and small cap theme style momentum based strategy because it's not working. This is more realistically what's going to happen for you guys when you're just new, you're 1, 2, 3 years into the markets, and you're trying to find something that'll work. You're trying to develop a strategy. This is what it's going to look like right here. So that's why I want to stick with it. Let's go through some pain here. Let's find out what really happens. As I've mentioned previously, I've tracked similar strategies on a 50 SMA breakout and a 52-week breakout. And what I noticed is that they were very market dependent. When the market was breaking out to all-time highs, then these kinds of breakouts in the mid and small cap momentum would be breaking out all the time. And as soon as the market stopped breaking out or even just went flat, this trade did not work at all. And that's okay. It's really okay. If you can make a lot of money in a short amount of time and then back right off, then the game becomes like your edge is saving money, is not losing, is not trading when the market is not supportive. If you can identify when the market's supportive and when it's not, there's a lot of value in that. So we're going to keep going with this strategy. I've just put the basic information into our kind of back testing, forward testing spreadsheet. You can see here I got right now a 15% win rate, which is exactly what you'd expect to see from this right now. It's just brutal, just brutal. And that's okay. We'll figure it out. We'll keep working on it here. So for right now, um, I'm not going to do a whole bunch more with this. I have, some of the information here. I might be able to use Claude actually to populate more of the information. I'm going to try that out, right? We don't want to make it harder on ourselves than we have to. You do need to analyze the data and like crunch those numbers and see the charts yourself for your brain to be able to pick up on the patterns. But we're not trying to make more work than what we have to do. So we've got quite a bit of information here. I'll just keep tracking this, and I think I just want to see how it plays out over the next month or two. Go through a few market cycles where the market goes down, it goes back up, and see how the strategy responds. I'm going to focus a little bit more on analysis with the low float gap and crap. I did go back through everything here and quickly just look at the chart patterns. What I wanted to see just really quickly is how many of these moves are going and I'm missing them. And the results were actually not that many. Like I caught most of the moves. There was maybe like half a dozen that went and I didn't catch, and that's totally fine. That is 100% fine. The important piece of information that I did pick up is that if it doesn't go, it gets crushed right away. Like the move, if it doesn't continue to break out the second day, it gets crushed. Here, let's pull something up here, and I'll show you what I mean. Okay, here's a good example. So if we go on the 5 minute chart, we're not seeing a lot of, it gaps up the next day and it gets me in and then it gets crushed, right? My stop loss held here until the next squeeze. So what would kill this strategy is if it gapped up and then the price got crushed the very next day. So a lot of times what's happening with these canceled trades is I've set a stop entry order and then the next day the stock gets crushed. My stop entry order never enters. I never get into the trade and then, I've set it up to cancel automatically a week later. And that's what happens. The orders all just get canceled and we all move on with our life. That is ideal, and that is what's creating a lot of edge. Now, if we get into a situation where that starts happening, our stop entry order gets triggered, and then the trade gets crushed. That's a problem. That's something that we're going to have to deal with when we get there. But as of right now, like I said, the most important piece of information that I got from that review was just simply that I can place more stop entry orders and I might catch a few more moves, but I'm probably not going to get more losses because the stop entry orders will just never trigger. So that's what I've got for right now. I'll leave it at that. Leave me a comment if there's some sort of verification software that you like to use, and we'll consider using it. I'll catch you on the next one.